Let's go. All right. So type of everything we learned so far. First of all, we're going to do in hindsight, and then we'll go in bar replay. Okay. What's important to do as the first thing you wake? I will act like if I was a London trader. Okay. So let's say that you wake up around 7 a.m. End of Asia session, right? Everybody wakes up around this time. So what do you want to look at? Let's just do this, do this. The first thing you want to do is like I erase all the drawing when I start my day. Okay. Then you want to look at, first of all, structural expectations. You look, what are the structural expectations? Price is actually creating this downward structural expectation. This point, right? It's always in blue and I need it in red. Let me just put it in red. This point was the last high. Okay. This point was the last low. So until we make a new high here, we are still in a downwards structural expectation. Pretty clear so far, right? As you can see here. So if we do and create those structural legs, until price makes this new high, it can go in whatever direction possible. Very clear. So you can expect buys until here. You can expect shorts. There is no indication where price will go. Okay. So that's very important to understand. Now, when it comes to structural expectation, this is just a compass. I don't want you guys to start like, I want to trade structural expectation and blah, blah, blah. Just use it as a compass. Okay. The compass is pretty straightforward. It helps you to identify the direction only, right? So as you can see, price is building buy side liquidity on intraday. Intraday. As you can see here. Overall, price is bearish. So the first thing you want to do is identify your inducement. As you can see, we have equal highs. Perfect equal highs, actually. Okay. The only thing you want to do is wait for an inducement. Until price continues and going lower, there's no inducement, right? This would account as the intraday for structural shift. Intraday for structural shift. You wait here, price fakes those equal highs. Everybody follows until now, right? Very straightforward. And you have your inducement. Candle pushing very clearly, right? Pretty simple. Now you have your potential trade away. And this inducement here is actually in the same direction than the structural expectation. A lot of the mistakes people do is they expect price to come back into the PY. They go in M1, they see an inducement, immediately they want to take the short, right? Unfortunately, it doesn't work that way. Let me just check. This is still good. Just wanted to check my trades. Sorry. This is still good. Okay, perfect. Now, as you can see, price continues. The only thing you want to identify is the inducement. Because there's a popular how do we call it, like popular thinking that just because we have an inducement, it means that we need an entry. If it was that easy, everybody would be super rich. Don't you agree? It's not because we have an inducement that we have an entry. So the goal is to identify the inducement, then identify the relevant breakout structure. But everybody can agree here that the relevant breakout structure would be where? either this would be like kind of an internal one, and this would be the relevant breakout structure, right? So you play price, and price melts from there. Okay. Now you go into the M1, no entry. And this is just the portion I wanted to show you in bar replay. Let's go back in hindsight. Here. So you identify the trade away. You identify the inducement. Now, once the inducement is triggered, you have the chance to use the reverse trading technique. What is the reverse trading technique? Everybody remembers is when you want, if you miss a trade opportunity, where would be the most relevant TP for you? A lot of people are diligent enough. They would say Asia low. But have Asia low created the new high? Yes or no? I don't think so. I don't think that Asia low created a new high. Give me a minute. I took a NASDAQ short, so I just need to move to break even. Okay, sorry. Because look at this. There, for me, there's no clear liquidity here because it hasn't made that clear push, right? That push isn't significant for me. I don't like it, right? I just don't like it. This one is the one that this is the structural leg, but this one either hasn't created a new structural high. So both of them have liquidity, but don't really have any types of potential reversal zone. But the target, the RTP would be here anyways. Okay. So now you put your alerts here. Okay. Everything's clear as of now. As you can see, price creates that false reaction into the SMT at Asia low. And now you go in M1 and you see price comes back, break and retest, and you have an entry here of the false reaction. False reaction video will be launched this week. So this is AFR, and price continues lower. Takes what? Nothing, right? It takes this. Not too much, but it takes this. And it leaves perfect equal lows. This is where things get interesting. You used the RTP. Here, RTP is here. This is done. Now, you use the previous daily low as target also. It has a reaction. As of now, you haven't looked into trade. This, when you have, okay, this is what's going to be explained on the video launching today. False reactions of relevant liquidity is always done on the opposite side of the direction. My NASDAQ short is very good. Very, very good. I closed this one and I took this one. Let me just, I'm sorry it's a little bit raw, but I mean, I don't want to lose money into that trade. Let me just take some partials. 50% here. I'll just take a screenshot before it's considered fake. All right. Sorry, guys. I'm very sorry. I don't want to do this in front of you guys, but it's just that. Let me just take some partials now. Here you go. Partials taken. Good. All right. I'm happy. Everybody's happy. Good. Let's go. Let's continue. So now, EG. So price takes out, let's say we had liquidity here, right? Also. And like I said, insignificant liquidity, but this one is significant. But remember, this is also the false reaction of those equal highs. So this equal high creates a new low. This is a false reaction. So the liquidity here becomes important. Okay, really important. As you can see, we create an inducement. Let's just try to start putting some arrows in the inducements. This is an inducement. There's a trade away. It's now they're enticing people to enter also because of that push. Let's make it clear. Remember when I say that when we have buy side liquidity and we have a first structural shift here, this is most likely no liquidity. Everybody agrees here in the call, right? No liquidity here because this is the first switch, right? But when price does this, and there's a huge candle based on human behavior, we can confirm that potentially we have people entering here. As you can see here, this would be the first real switch, but look at this push. This entices people to enter. Everybody agrees with this, right? Can you confirm this? So this would most likely be a relevant enticement zone. Okay, so we can put stop losses here. Now stop losses are taken from here, and as you notice, there is no reversal in those stop losses, right? No reversals. And this is very important. Let me just adjust my TP here until the point here. As you can see, there is no reversals because we are now not. It's very important. When there's an inducement, you want to confirm the reaction. A lot of people see an inducement and want to be involved now. Look at the inducement. Wait for the reaction. The reaction is a new structural push, new structural shift, anything that actually gives you an indication that there's a reaction. So here we cannot argue that the reaction of this one is significant. Now price pushes here. A lot of people would see this as an inducement, but remember the candle hasn't closed clearly below. This you have no doubts. This one you have a doubt. And look at the reaction. This becomes significant equal lows. Even though it hasn't made a new high, look at the rejection of it. Very important. So until you see this rejection and you see some kind of sort of reversal or downwards behavior, you are not looking for shorts. Now you see price here, and this is where people get confused. They would mark this as a decisional. I think I'll do a specific videos about decisional PYs because this is not a decisional. This hasn't made a significant low. Okay. This here, this is a decisional. It has made a significant low. Okay. So this is just kind of a supply whatever zone. Okay. So as you can see, price pushes here, comes back, fakes this potential zone here, does this. Here's your first internal break of structure. Now the problem is people would see this as an internal break of structure and they would want to take this as shorts. But remember, this isn't a decisional zone. It hasn't made a new low. So this is not, even if you go in M1, it hasn't made a new low. So this is not a decisional zone. So you still use the extreme as entry zone. Okay. You use the entry, you use the extreme as entry zone and you just target the most relevant build liquidity right now. And we are still trading in the same direction than the inducement of the day. Very, very straightforward, small little stuff that actually helps you staying out of traps. Let's go check here. Exactly some good indication. You can see here AUD USD today, right? This is a proper decisional zone because it has made a significant high. This one is not a decisional zone because it hasn't made a significant high. Very straightforward. This, oops, sorry. This is a decisional zone because it hasn't made a new high. This is the extreme. Okay, we'll have a video about it anyways, so everybody will understand. As of now, is everything clear before I continue with EG? EJ, everything clear? Everything clear? Yes or no? Notice how we identified the liquidity. So first of all, we saw those equal highs. We saw price doing a new structural low, enticing them to enter. Price induces. We have a confirmation that liquidity has been grabbed, but it doesn't mean that price will do this. And I think this is where people struggle about entries is they see an inducement, they're already ready, right? So entering fast without any indication is just completely stupid. Okay. Again, I don't want you guys to record this and say, Joe told me that if there's an inducement, I cannot enter because sometimes it will work. I'm just saying the confirmed way of doing it. Okay. So make sure you understand the difference between risk and no risk. Okay. This is two different things. For me, how I trade is I identify an inducement, I identify a trade away, and I identify a target. That's pretty much everything I do on a daily basis. Let's go get real examples. As you can see here, this is Euro USD, right? I've taken the shorts here. I was targeting the equal lows. Well, where is the inducement? The inducement is here. Inducing with speed and momentum, these irrelevant and irrelative equal highs. Why? Because it hasn't made a significant low. We're trading away from this point here, speed and momentum, into this potential, whatever enticement zone we have here. It doesn't matter. I was looking at the intraday play. Equal highs, inducement high. I was targeting those points also. Okay. Price pushes, wait for that relevant breakout structure. Price comes back into the perfect decisional PY. Have you seen this leg has made a new low? Let me just check my NASDAQ. NASDAQ is looking good. Good. Not easy trading, doing all this crap at the same time. Okay, so AUD, sorry, comes back. Have you noticed the difference between an FBOS and an IFBOS? Look how it pushes. Look. Speed into it. It hasn't done this. Right? See the difference. See the candles. This is literally 23 minutes. Okay? Very important. Whoever is in NASDAQ, I would recommend you taking a little bit more partials. I'll let the rest run. I took you 50%. Let's continue. I'm just taking another screenshot. All right. And as you can see, I've taken partials and break even. Oh, that was a break even. Let me just check. Yeah, that was a break even. Because I was targeting those equal lows. Then what price did? It induced high again. But remember, it's not really an inducement because they have just went back into the extreme POI. Do you notice the difference between inducement POI and decisional POI, how important it is? Like, it's really important to understand that we are not actually, when it comes down to a decisional and an extreme, let's say we have a decisional. That's a bad drawing. Let me just do this. If you want to take a decisional and it fails and it goes to your extreme, you always have that chance of it to happen. And this is why I always say, if you don't want to lose money and you don't want to risk, and it's your first trade of the week, always look at the extreme. Always. Always. It's very important to understand that the decisional, it's more of I'm late to the party, I don't want to get in. That's personally how I do it. I always look at decisional purely when I'm in profit. Okay. I hope this helps. Now, to go back into what we were talking about, EJ, notice how the um, subtlety between a decisional and an extreme is. Have you noticed like this hasn't made it a significant low? If this would have made like a real low, this could have potentially be a solid decisional zone, but it didn't. Notice the difference. Everything clear for decisional. Okay, let's continue. I'm going all over the place, but I'm trying to really get an everything so far. For me, when it comes to a trade, I constantly need to see a reaction. I need an inducement or I need a clear target. So I repeat, to take a trade, you always need an inducement. It doesn't mean that you will take the inducement trade, but you always want to trade in line with the last most relevant inducement of the day. And have you noticed here, I took this, targeting the low, took forever, but I closed yesterday, but that would have been a nice trade. I took this, but imagine you didn't take this and you just take this. There's still an inducement. It hasn't induced anything to the left other than this. And as you can see, now people would say, this is an SMT zone. There's a reaction to go lower. You are right. But when this lower is taken, do we have that reaction? The answer is no. So do you understand the subtlety between the importance and the liquidity? I don't know if that's clear or maybe it's confusing what I'm saying. 1 to 16, that's violence. Uh, well, could we argue we have a reaction? Okay, so let me just make it clear. Let's try to. I think some of you guys like the graphs. Yes, but it makes sense. This makes sense. You agree that we have a reaction from these equal highs called a false reaction that you guys will learn this week. False reaction, right? Then it induces low. There's a difference between a reaction and a false reaction. This is the false reaction. This is the FR. This is the actual reaction. That now, if price starts doing this, you could look for shorts. But remember, you need to look if there's any liquidity here. But imagine this is like all the liquidity needed here. They have like multiple liquidity, and you're targeting, let's say, this is the Asia zone, right? Asia low. You understand the difference. This here will be engineered by the liquidity here. This here is engineered by this here. So let's just make it easier for you to understand. A1 is engineering A2, right? B1 is engineered by B2, but also by B3. Let's say B3, B3. I'm really trying to make a sense of this because for me, it's just so easy. There's a big difference between liquidity taken and liquidity to target. I'm sorry, let me just repeat it. I think I have a good idea how to explain it. We have equal highs, right? Equal high. This is okay. I know how to explain it. We have equal highs, faking, inducing high. Everybody agrees with this. This is the liquidity that it's taking. Price will have a reaction to it. The reaction will depend on the liquidity it's required to take. So let's say that there's a lot of liquidity here, it will melt, but it will melt even more if we have so much liquidity to take here, right? But if there's a lot of liquidity, not a lot of liquidity, and there's just a little bit of an inducement, price will just do this and then just do this. Does that make sense? The liquidity reaction will depend on the weight of the liquidity, and you cannot understand the weight of the liquidity because we don't have access to the order books. But the reaction can depend also on the actual targets. Let me give you an example on the chart. Here, people saw this as an inducement. Okay, perfect. It's a clear inducement. Pascal and his friends took it. There's an entry. The liquidity here is not enough to engineer this because this has just made a new high. Now they engineered the SMT, so this SL adds in value, adds in volume. So now the reaction will be even more significant because not only they have the liquidity from this breakout high, but they have the SL. And this is why you need to take those partials because you never know where it will be targeting. Let's repeat myself. When you have an inducement, we oftentimes, let's say, we have equal highs. False reaction, inducement high. Members, let's say, let's do something like this, right? And this whatever. We have an inducement, and members try to do this and target the low constantly. But maybe the only target you can take is until like this decisional zone that actually was a false reaction because the liquidity here is not enough to engineer the push down. But imagine this point is like major equal lows, made a freaking significant high like this, like whatever, right? We have like clearly, like, do you understand what I'm trying to explain? The target, the entry is easy. The target is what's difficult. And I think that yesterday is a perfect example. Let me just remove the drawing. Let's do it together. We have structural expectation downwards. We know they wanted to go down. Price pushing, speed and momentum, false breaker structure. Nobody can agree that this is a false breaker structure. Now, you target this as an SMT, right? You know that this is a false breaker structure, but the false breaker structure has been done, but the SMT hasn't had any reaction to it. So taking this entry and targeting this low is actually trying to predict if this SMT will fail now. See how they come back and take this POI speed with speed and momentum. Look at this release, that wick. They even make a new high, enticing them to enter. Now the liquidity weight is even higher. This is why when you take those trades and you don't have predetermined liquidity, just target the next structural point, right? Just target the next enticement zone. Let's try to make it clear. We have equal lows, enticement, inducement. When you enter here, don't target this high. You can, but take partials before because this is the enticement to enter here from this. So why are you trying to target zero liquidity because there is zero liquidity here? Does that make sense? I'm trying, guys. It's just so natural for me to understand these stuffs. Does that make sense? Because you're actually predicting the next enticement zone. But imagine the structural expectation are downwards, right? Target the imbalance, target the static 5R, whatever, right? Look at this. This is exactly what engineered my shorts. We have price pushing. Let me just remove all that crap. We have price pushing, reacting to this potential SMT. Price comes back into that break-in retest zone. I was targeting the other one. I saw that. I closed my position. Price created that relevant breakout structure. Came back. Let me just take another screenshot because this is getting more than juicy. Like this. Come on, like Michigan, whatever, hot dog Michigan Consumer Sentinel Pro, whatever that shit is. It's good. This reaction to this break-in retest and that relevant breakout structure adds even more weight because we have the next enticement zone targeted and we have the reaction of this SMT adding weight here. Please tell me you please tell me you understand. Please, 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 please. Yes, yes, yes. Very clear. I love that. See, you guys are all super, super smart. Professionals now. Why I wanted to talk about this, it's because people TP, we're the best traders in the world. Let's go. TTS for the win. Let me give you a good example. And I know that this is going out of the way, but I'm telling you, you will not regret understanding what I'm saying right now. People, let's say we have this false breakout structure. Okay. So we have this. Okay. This induces this shit, but creates a false breakout structure. Have you noticed how speed and momentum it is? Right. As of now, you don't know if this is a false breakout structure. You think it's probably a relevant breakout structure, right? But look how it comes, it pushes with speed and momentum. Look how it engineers this SMT perfectly. SMT, boom, right? Comes back, pushes. You have your confirm inducement. You look to the left, it even induced this structural point. So this is like two birds in one stone. Price comes back, creates that relevant break of structure, comes back into the inducement PY. Look how it slowed down, and you're respecting the actual like potential new structural being created because you're potentially wanting it to do a structural shift, let's say. And your goal and what 99% here people would do is they would target Asia low. Okay. Look what happens. Look what happens. This is like the most important thing I will say today. Don't target Asia low. Target the relevant liquidity, like those equal highs, equal lows here. Look how they come back into Asia low. They fake those equal lows. They create that false reaction. They induce low, or they don't, maybe because this is candle closure. Look how they push the price in one go, leaving maybe taking even this. But now the liquidity here is even more important because it has been enticed another time. So if, example, you were in the shorts here, now it would make sense to target the low. Sorry, my allergies. Too much people, when they target defense. But there's two ways to target when you take a trade. Two ways. When you take a trade, you want to do two things. You either target the next relevant liquidity or you target, oh, why am I doing this? Or you target, let me just say this. You target the next enticement zone, right? Right? Is that clear? Target the next enticement zone or target the next liquidity. Is that clear? I need some. Yes, it's clear. Yes, it's clear. Give it to me. Perfect. And it sounds complex, and I found a way to simplify your life. Just fucking take partials. That's it. Take 25 there, 25 there. Boom, boom, boom. That's it. See my NQ. I took 50% here when I was faking, and look, the trade is marvelous. I was targeting this thing here. Have you seen how we adjust, right? Engineering this SMT, pushing higher, using the other pairs as potential compass. If there's something, no, there's nothing. So this break and retest, creating that new low, coming back, right? And since there's no liquidity and the structural expectation is downwards, this is not an FBOS. Those break and retest entries are always nice. So the moral of the story, take partials. Okay. So this is very important because I see a lot of people like taking a trade and automatically dragging their shit to the ground. Trust me, you can do this as your M3, but have your M2 way before. You will have a video about the break and you will have a video about everything, even my cats. I'm kind of pissed that I closed my Nasdaq because Nasdaq when it dumps for real. Peace. That would be the best trade of the week, but I risk it so much not money on it because I was kind of scared, and also my buy here I took was really low risk. I didn't have the time to adjust my trade assistant for this one. This could have been a banger, like a real banger, but it's okay. We can have perfect trades every single time. Okay. So to go back of what I was saying is your goal is first of all identify where's the liquidity, and this is what I enjoyed from this week's call. Let's do the exercise here. You have sell side liquidity being built very clearly, right? You have sell side liquidity being built. Nobody can doubt about it. Now you have an inducement of this. Here we go. Let me just explain. We have these equal lows, right? Equal lows. You see them. Equal lows. Boom, 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 boom. This is the false reaction. Your false reaction induces the liquidity of those equal lows, but if you look at the trade away, the last more relevant trade away is this one. This makes a reaction. This goes lower. This in one push goes back into that POI weirdly. Then it comes back and it retests this. And this is just to show that this inducement of those equal lows is significant because of the reaction. So these can also be treated as RBOS for your continuation because other than this liquidity, all the liquidity right now is on the sell side. Enticement, enticement, enticement. Look how they come into this POI, this zone here, this zone. Again, false reaction, right? This is potential in SMT. Look how they make fast a new high. This is also false reaction. And look how they come back into this PY. So basically, to know the significance and the insignificance of a false reaction, I wait for price action development on the opposite side. Excellent question. So we have here. For me, this is already significant of the because of the equal highs, but I'm not looking because of this reaction, this new push. But I'm not looking for shorts until I see like something like that, right? But this is when you have structural expectation to the downside. Structural expectation need to be also in place. How much percentage this week after the trade? I think I might be at 11%. I'll have to check later. I'll check later. I'll let you guys know. Okay. That AU on M1, don't you think looks like the example you gave of the type of entry of being the same POI, like the trade you took on NASDAQ? This one, Andres, are you talking about this zone? Yes. No, because this zone is always the same. So it has never made a new high. So if you go on M1, it could be the same thing, like you say. So next week will be more riskier trades for. No, it's going to be the opposite. I might not even trade next week since I already taking my profits for the next 2 weeks. I'm good. I'm really good and really happy. I need to relax now. Yeah, let's continue. So what I need you guys to do is when you're going to watch today's video is two things. Identify liquidity. Everybody knows how to do it here, right? Everybody knows how to identify relevant liquidity. See when liquidity has a reaction. What's most important with the false reaction, called an FR, is when it reacts to the liquidity build. Okay, hope this is clear. Then what you want to do is identify inducement, not enforcement, inducement. Then trade away. And PA development. Again, let's give you another example. I love the example of the equal highs. Enticement, false reaction. This is the false reaction. False reaction. You have your inducement high. Why did this disappear? False reaction. You have your inducement high of those equal highs, right? Equal highs, irrelevant liquidity, relative liquidity. We don't care what it is. The goal is to identify the false reaction, okay? The enticement zone. Now, you don't take shorts. You wait to see if price slows down and gives you price action development. But also, this slowing down needs to make sense for you to target this. Because if price have been pumping upwards all day, what do you want to do? Take a 1-2-1, right? Because why would price target this structural point? It has nothing, right? Other than maybe liquidity here, but this is also the inducement of this potential FBOSS. So if you want to do something, you would have to target this inducement POI. And I'm talking about that because I've seen too much this week people targeting defense. Is that clear? I really need this to be clear. And to fix all that problem, even if you don't want to be clear, I'm just training you the way I see it to have a little bit more reasoning behind it. If you don't want to break your head with it, just take fucking partials every single time there's like a significant push. It's going to fix the whole story. Because the problem is people constantly, so example, they see this inducement of Asia low. Let's say they see this. Now, let's remove all this. People see this. They see inducement of, they see they see this push here. Then there's nothing to the left. This is a target here, right? They say this is a target, but it's significant. There's a buy side liquidity. So perfect. So now I'll wait until there's a relevant break of structure and until price comes back into my POI. So they will do this. They will do this. I don't know. Let's say they did this. My bad. That was a fail. Like they do this, they enter, and they target, let's say, these equal highs. And then price does this. This is because you haven't identified the proper trade away. What's the last trade away inducement? What's the structural expectation? Where is the next enticement zone? Where is the current liquidity for the day? Where's the false reaction? False reaction of this here. Without this POI to the left, without this reaction, and we don't care how you market it. You don't even have to market. Just the fact that price pushes low, makes a new high, you should have the intelligence to look to the left. If this would have done this, and then price would have induced this to the low side with a false reaction and this, whoa, that's a whole different story. Is that clear that every single variable, every single little detail makes and engineers your whole freaking trade? Do you see the difference between this structural point being here and here? Do you understand the difference? Remember what I said. You want to trade into the liquidity or away from it. So into the liquidity is you want to trade into the enticement. Okay, let's continue. More examples. I love that. What's wrong with? Okay, sorry, my Asia session things. Which one can we take that could be juicy for us to backtest? Is there any days you guys liked so we can talk about it? Oh, yeah, I'm not super happy with my profit. It's at 10.73. I don't know why. It should be more. But like I said, I reduce the risk. I went with a fixed lot. 10.73. It should be at least 11. Gotta go to work. Thank you. I don't know why it's only at 10.73. It should be a little bit more. Okay. So Euro USD Wednesday. Let's go. Wednesday. Cool. Wednesday, yesterday. Okay. So this is a perfect example. Again, structural expectation clear. Coming out of Asia, what are the intentions? Right? Very, very clear. Buy side liquidity. Then price induces this Asia high. No false reaction. Mitigates this point here completely ignorant. Comes back, creates those equal lows. Completely stupid. This is the false reaction of those. No, that's not really a clear equal lows. I'm just not gonna do this. And then price entices low. Comes back, fakes these points here. False reaction, come back into the break and retest. Pushes lower. Now price is pushing lower than Asia low. What's the first reflex you have to do? Look to the left. The left is pretty far away, right? So we have this point here that I don't even know what it did. Okay, did a significant push. So price does this. Ah, this is good. False reaction, inducement low. So now we potentially take the liquidity here. This is a perfect example. Induces low. Where is the liquidity? This. That's it. Right? Perfect. So let's go in M1. False reaction, inducement low. Price pushes. Speed and momentum gives it away. Speed and momentum. No slowness. This is most likely a false breakout structure just based on the reaction. So this is an SMT. At the same time, price pushes, comes back into the break and retest zone, gives it away also. Right? And this is why you want to always wait for price action development. So you see price pushes here, create that false breakout structure, break and retest, pushes lower. What you want to do is wait. So you have that false reaction. So this is an inducement. This becomes a relevant breakout structure. So what I would do is I would wait for price to come back into this PY. No! What have I done? Okay. I would wait price to go back into this PY, but it never comes back in. The buys here wouldn't not make sense because I would never take buys because of this. The false bear structure. It's pretty simple. Structural expectation. Sell side liquidity. First structural shift. This is an FBOSS. This could be cool. Really cool. Like on the 30 seconds. Oh yeah, baby. That's good. That would be good. Do you see the difference between an FBOSS and an RBOSS? Speed, the momentum, the false reaction, the irrelevant liquidity upwards. That's the only liquidity we have, or maybe a little bit here because of the breakout of Asia low. But look how they perfectly come back and break even the Asia low breakouts. This is like I kind of have FOMO of these trades. Would you like me to go on a final day before we end the call? I know it's raw calls, but do you mind going through UF today London session? No problem. Sorry, my wife was using the vacuum, so I had to mute myself. All right. So UF today, we said UF. Do you mind going through UF USD CHF? Okay. Perfect. So let's remove the drawing. Let's look at structural expectation. Upwards. Very, very clear. We know for a fact that this is upwards. All right. Let me just mute Discord because I'm being bombarded with things. Perfect. Structural expectations higher. Coming out of Asia, buy side liquidity. Okay. First structural shift here, potentially. We look to the left if there's any inducement. We have these equal highs, right? Why? Because we see the push. So this is a false reaction. Perfect example, boys. Thank you for this. False reaction. Coming back into Asia midline. I don't use Asia midline because I don't trade in London. But see, this comes into a significant decisional PY. Why? Because it made a real high. This is a decisional PY. This is the extreme. But this extreme can also be used as a decisional because it made a new high, right? Decision on the extreme can be the same thing depending on what they do, but this is most likely the extreme. Comes back, reacts from here, pushes. We don't really care, not important, right? Liquidity has been built. Clearly, right? This one here, clearly. Price comes back, creates juicy break and retest traders. Yeah, buddy. We love that, right? Even more breakout traders. Yeah, buddy. We love that. Price pushes, right? Always look constantly to the left. What do we have to the left? We have this shit. I don't even know what it is. This is completely. I would. This is too far from me. Like I don't look at this. Okay. Price comes back, breaks even these guys. Okay. Reaction, right? Reaction of this potential break in retest again or BE. We don't know. For me to validate the break even or the liquidity, we wanted to make a new high. Okay. Price does its thing, makes that new low, takes this liquidity, potentially even break them even. This is potentially a false reaction, but this is a little bit too much of a gray zone for me to look for anything. Okay. Price instantly pushes up. Now it goes up. What do we have to the left? Nothing. Price here reverses. Let's go in M1. What do we see? No. For me here, boys, there's nothing. The only trade potentially based on all this that I would have taken is maybe this here. With this here to target the next enticement zone. That trade would have been done already. Like this. That's it. That's the only thing I would take. Nothing else. That's a pretty simple day. And as you can see on the M5 and M1, this false breaker structure actually is still protected by this decisional POI. So you could put your SL above this, and this could be a great trade. And most likely you can even target this because we have now potentially equal lows based on this enticement zone, right? I hope this helps for Tim's and Valerian. That will be the last one I do today because I want to go into questions. But I hope that this helps. I would take like 80% here since it's late and call it a days. So let's start the recording and go into questions.